Welcome to those of you who've just joined us. We're just getting everybody in from the waiting room at the moment. We've got a lot of attendees today. So if you can, I could ask you to stay in mute and be patient for a minute just as we get everybody in, and then we'll get started. So thanks to those who've just joined us. We've got a large audience today, but we're going to get started just now and get cracking with the day's event. I will keep an eye on the waiting room, and I'm going to be here in the background if you need me. So my name's Hayley Monks. I'm one of the co-founders of the Women's Utility Network. If you come along on a regular basis to this event, you'll know my name and my face. If you're new, welcome, and it's great to have you here. Our monthly WUN For Alls we've been doing now for over 12 months. It's a place where people can come and drop in, feel connected, share and gain knowledge, get some positive interaction, talk about issues, and just really a space to connect and learn. So before we go on to today's session on PPAs, I wanted to highlight to you our first in-person event after 2 years. So on Thursday, the 7th of April at 6 p.m, we will be at a Google office in London. It's a great opportunity for all of you who love to come and network and meet people, to come along and actually see people that you've been seeing on screen for the last 2 years face to face, but also hear from some really exciting speakers. So we have Kate Jones, who's the CIO at Cadent, and Anne-Marie Scott, Director of Manufacturing Industrial, which Google also means utilities, and Nirvana, who's the head of marketing in that space as well. It's a fantastic venue. It's going to be a really exciting evening, and can't wait for it to be back together. So if you go and have a look online, you'll be able to pick up tickets for that as well. But now I'm going to hand over to Joe Butlin, also co-founder of WUN, and Joe is going to be hosting today's event. Joe, over to you.
Great, thanks very much, Hayley, and good afternoon, everybody. I was about to say, lovely to see you, but unfortunately I can't, but I look forward to shortly. Just sort of quick introduction to today's session. PPAs, power purchase agreements, is a sort of a big subject, and really conscious that people will be coming to the webinar with very different backgrounds and experiences of PPAs, and we'll have a mixture of experts and people who have never heard the term before. So we're going to try and cover all bases. Tiny bit about me, if we can just move on, Hayley. As Hayley said, I'm a co-founder of WUN. I think if you cut me in half, you'd call me an energy geek. I've been in the industry for a very long time and wended my way round the market. You can see up there sort of some of the things that I do now. So it's a real mix of activities and interests. But I think that gives me a very broad perspective on PPAs. I'm delighted today to be joined by Louise and Adam, both of whom I've worked with in different capacities and still work with in different capacities, but real experts in the area. So I'll just hand over to Louise to introduce herself, and then Adam, and then we'll get into the meat.
Thank you very much, Joe, and hello everyone. Yeah, I've been in the energy industry for quite some time now, it's about 15 years, but my background is very much finance. And I've been working in finance for about 25 years, moved into energy 15 years ago, and currently CEO of Smartest Energy Business, which is one of the smartest businesses. So I'm more sort of on the retail side, but I do understand somewhat around the PPA side. So yeah, Joe's very kindly asked me to come along and help with the panel. So yeah, looking forward to the discussion, because it's definitely very topical at the moment. So I'll pass over to Adam.
Hi guys, yeah, Adam Clark. Recently joined a company called the Energy Consortium, who purchase energy for about 65% of the UK's universities and museum sectors. Been in the industry for 20 years. Previous to this, I was involved in writing corporate PPAs, so pulling corporate PPAs together for a range of public and private sector entities. A big part of my attraction to tech is that across the higher education sector, there's an absolute need to decarbonize, and of course corporate PPAs is one route to that. So looking forward to sharing some of my experiences to date and hearing from you guys on your thoughts around all things to do with corporate PPA. Back to you, Joe.
Thanks, Adam. And just in terms of format, the three of us are going to sort of talk for about 10 minutes each, roughly. We've got some slides to share as well. But please sort of add questions into the chat as we go. If they're easy to pick up, we'll pick up as we go. But if not, we've got about sort of 25-30 minutes at the end to really engage and have some proper discussion with everybody on the screen. And as we've said, there's a lot going on at the moment, and we're going to sort of try and weave in some of the challenges of the market at the moment into the PPA world as well. So sort of with the war in Ukraine, what's the implications now and going forward? But I'm going to start just by talking about the need. So what are power purchase agreements? They're really the way of for renewable generators, so particularly solar and wind, to sell their power into the market at a agreed fee, a standard fee over a standard period of time. Now, if you look at this slide, it's lifted from the FES, the Future Energy Scenarios that National Grid ESO produce biannually. It's one scenario, but you can see there, if you're looking at the sort of the pale green and the pale and the bright orange lines, which are sort of onshore wind and solar, that's really the growth that we're going to see in the market forecast at the moment over the period to 2050 to get to net zero. And to do that, we need to build an awful lot of generation and of solar and wind. So the power purchase market, power purchase agreement market is going to expand accordingly. I think my first point, I was actually at a ESO event yesterday. We were talking about all things market, and we're expecting next week a sort of a political announcement from the government in terms of the response to the Ukraine energy crisis, and particularly around energy supply. And so the expectation is actually, it's quite likely that we'll see a lot more nuclear coming to the fore, and also offshore wind. Those are the two big infrastructure pieces that are relatively easy to do. So this is the picture today based on the scenarios before that the war started. But I think security of supply and sort of self-generation has become a real focus. So this mix might change, but basically, if you look at sort of the left-hand side, 2020 against 2050, you can see the growth is enormous. So if we move on, Hayley, please, to the next slide. And really, this is the sort of the simple starting point. And it to a certain extent, it's relatively clear to most people, but renewable generators, when you're building a wind farm or you're building a solar generator, the revenue, the value of it is going to come in the future. So when you're going to a bank or to an investor to build your business case and really get the finance to build the asset in the first place, they want to be able to see some long-term revenues, some sort of relatively secure revenues. And as we know, as the market bounces around all over the place, that can be quite hard to predict. What power purchase agreements can do is give some certainty of revenue and certainty over a period of time, be it 5 years, 10 years, 15 years, and even longer, that the banker can, we call it bankable revenues, that the bank can then say, fine, we've got certainty, you've got an agreement, be it with a supplier or be it with a corporate provider, and we will therefore lend you capital. So that's the sort of the starting point in terms of why you get a PPA in the first place. Not everybody does, and if we can go on to the next slide, please, Hayley. There's actually multiple ways of financing new renewable generation. Traditionally, the PPAs have been a strong route. A lot of them have gone through suppliers, so effectively agreeing an agreement with a supplier on a long-term basis. Now we're seeing more and more corporate PPAs, and we'll home in on those. And by that, I mean a large user, a large corporate customer, consumer, will agree directly with the PPA provider, with the generator, agreed a PPA. That then means that they've got sort of some certainty over their both cost over a long period of time, but also some of the green credentials as well. And I'll talk about that in a minute. So there's lots of different types of PPAs, and Louise is going to talk more about that in a minute. Also, developers, generators can just go to market. They can just go what we call merchant, where you're bidding into the market and you're taking risk on the sort of the volatility of the market. That's another route that you can sell your power. The third, which has come back into the frame, Contracts for Difference, is a government-backed scheme. Many people will be aware of it, and that's really where you're getting a sort of agreed range of prices over a period of time. Onshore wind and solar have been out of Contract for Difference for quite a long time, politically driven, but actually in the last round and going forward, they're coming back into play. So that potentially gives a tension with PPAs, that actually that's another route where you can get some firm long-term revenues coming. So that might put some pressure on PPAs in terms of actually not so attractive going forward. And the last route is where developers or investors are developing the asset for their own use. And there they might just build the business case with looking at the cost of their energy they're using, but then also looking at, you know, does the investment case stand up with their own use. Many developers, and there's all sorts of different models in the market. So some developers will be developing lots of different assets, and they're probably using all of these different routes to market as in a different mix. Some will go a bit merchant, a bit PPA, whatever. Others will just focus on PPAs. Others will just focus on CFDs. So I'm not pretending it's one size fits all, but hopefully you can see within that how PPAs sort of fits into the mix. And as you go forward, so we've sort of talked about the initial setup of PPAs for bankability, but actually as you move forward, once you've sort of delivered your business case, PPAs still play a real route in terms of that long-term certainty. So it really depends on businesses' strategies. So if we can go on again, please. And here I'm really going to focus in on the corporate PPA, which lots of people talk about a lot of the time, and we've seen some growth in it. And I think here what we're seeing is real growth in demand for corporate PPAs, CPPAs as they're sometimes called. And what's driving that demand is two things. One is sustainability. It absolutely sits with corporate sustainability agendas and ESG agendas. You know, they've got a dedicated renewable asset. It might even be, you know, branded with their own branding. It looks really good from a ESG perspective. It helps with their carbon reporting, and obviously there's PR benefits attached to it. So we're seeing a lot of the big corporates having, you know, one or more PPAs, and you can have multiple PPAs, and really sort of pushing up the green credentials of their assets. The other side is price, and particularly in the market at the moment, where you've got some long-term price certainty. You what we call sleeve it into your supply contract, where you're effectively saying, well, for that chunk of consumption, I've got a PPA at this price for this amount of time. That means you're then not exposed to the volatility of the wholesale market. So again, it's got advantages in terms of price. Obviously, with the Ukraine war, we've seen prices shoot through the roof in accordance with gas prices. So PPAs were sort of bouncing around sort of 45, 50 pounds megawatt for a long time. We're now looking at sort of over £100 in today's market, sort of around 150, 120. That may come down, or it may last a long time, depending on the long-term effects of the war. But I think all of it is linked to the wholesale market. But the other bit I just wanted to pull out was REGOs. So REGOs historically had no value at all. what we're seeing is as the demand for renewable generation and renewable credentials is going up in the corporates, actually REGO prices are going up accordingly. And we've seen those absolutely shoot up in the last sort of 18 months, 24 months, from, you know, pennies into now £5, £6, £7 per megawatt hour. So REGO prices, actually, if you can lock those in as well as part of your PPA, then that gives you certainty again of your REGOs and your green credentials going forward. So corporate PPAs are becoming really attractive. Budget certainty and sort of ESG green credentials are really important. I think what the really interesting piece is right now is we're almost seeing a flip for the first time ever into a seller's market. So always before, if a corporate came to market and said, I want a PPA, there would be a queue of people lined up to offer them PPAs. If you're sitting there with a generation asset today and you're looking at the wholesale market, actually that's incredibly attractive, and the prices in the wholesale market are incredibly attractive. So I think we're just beginning to see, and again, if you've got an investor behind you or a bank behind you saying, well, hang on, if you sell the PPA, it'll go for that amount, but if you sell it into the market, it's significantly more. There's pressure all around. So we're just seeing a flip, I think, and it'll be really interesting to see how that evolves over the next months and year as we move to a seller's market. It's the speed of how quickly we can build these new assets versus that demand. And, you know, there's obviously, hopefully, an acceleration of building, but it all takes time. So if we can just move on, I think I'm handing over to Louise to talk about what different types of PPAs there are.
Thanks very much, Jay. Yeah, if we could just go on to the first slide, Hayley, thank you very much. So before we go into a bit more detail on the types and the duration of PPA contracts, I just thought it would be useful to share a visual on what's actually happening in the wholesale energy market, especially over the last 3 months. So I'm sure many of you are very familiar with this, so apologies if I'm stating the obvious, but I just thought it'd be useful to share for everyone. And just recap for those that aren't as close to it. So last year we saw low wind, we saw very low wind, low gas reserves, outages at interconnectors, plus recovery from COVID as businesses started to open up. So we saw an increased demand, as well as all those sort of shortages, which meant that we had a huge amount of volatility last year within the market, but also a sort of sustained increase in prices. And now you can see on the right-hand side of that chart, we're now seeing the impact of the Russian invasion of Ukraine, which is again putting further strain on the wholesale market. And at times, you know, prices have been 10 times of seasonal norms. And the numbers you can see on that graph, those are the average prices. So the within day volatility swings are absolutely huge, completely insane. And at times we've seen markets open with prices up 50% only to drop 20 or 30% later in the day. So this is where we're seeing asset owners, so generators, who have a strong hedging strategy and who are with off-takers, suppliers who are offering platforms that give them visibility and direct access to markets. This is where we're seeing them being able to take advantage of that volatility. And making those quick decisions and transacting to take advantage of those market spikes. So if we just move on, Hayley, thank you. So before I go through, again, this is just an example of some of the types of PPA that are out there. But before I go through those in detail, I just wanted to cover off private wire. So this is where there's a behind meter direct link between the consumer of the power and the generator of the power, so that there's no use of the transmission or distribution networks. And this type of arrangement is really attractive because you're avoiding the non-commodity, non-energy charges, which can be a considerable chunk of the energy bill. So that's fantastic. However, there is a risk that in future non-energy charges could be based on gross consumption, which would remove that benefit for private wire. Haven't seen anything yet, but there is that concern, and there's a huge investment that's needed to put the physical infrastructure in place for private wire. So if this regulation does change, then it could wipe out the benefit. Additionally, there's a challenge over location, and that's both in terms of scale and proximity when we're looking at private wire. So the consumer needs to be close to or on the same premises as the generator. So that's another huge challenge on private wire. We do see this work for some large manufacturers, say Toyota, for example. There are, as I said, variations on the types of PPA, but they're broadly can sit in these four buckets. So we've got fixed PPAs, which tend to be shorter term, and they provide a fixed price that the offtaker will purchase the energy for, which means that the asset owner has very limited exposure to market volatility. So it provides short-term price certainty. We then have flexible PPAs, which provide revenue certainty, so longer-term revenue certainty, which Joe's already explained is really important. So in the absence of government subsidies, when wanting to secure revenue in order to leverage debt for new build projects, having a long-term PPA in place is very, very important. The flexible PPAs also enable the asset owner to maximise revenue, so it enables them to sell power in monthly or seasonal blocks of volume for the future years, as and when market opportunity arises, enabling them to maximise their potential revenue. And again, this is where it's really important to have access to live market data, visibility of that market data, to make sure that we're able to respond quickly to any market movements. We then have CFD PPAs, and these arrangements allow the asset owners to align their contracts with the terms of the CFD commitment. So we are expecting, and I know Joe mentioned this earlier around solar and offshore wind, we're expecting the latest CFD auction to drive a new wave of offshore and onshore wind and solar projects. And backing this off with a CFD PPA provides a route to market and long-term revenue certainty, which again is important when leveraging that finance. And then there's corporate PPAs, again, long-term agreements. So where I've not been able to secure a CFD, for example, then a corporate PPA may be an alternative route to market, again, providing that long-term certainty of revenue for the generator, but it's also protecting both parties, so the consumer and the generator, from market volatility. One of the challenges of a corporate PPA is just the sheer scale of the capital required and the need for a strong balance sheet, and that's why we're seeing the large volume of CPPAs being signed in the UK and Europe by large multinationals such as Amazon and some of the larger banks. And yeah, for a consumer, it provides security of supply at a competitive price for a long period, but also helps provide the corporate with the evidence on their journey and a way of achieving net zero as everyone works towards that sustainability. And just to mention renewable certificates, REGO. So with a corporate PPA, unlike the other arrangements, that the other PPAs I mentioned, where the REGO certificates are being sold as part of that arrangement, with the corporate PPA, the certificates go straight from the generator to the consumer. And actually, if we can move on to the next slide, it's probably easier to explain. So with a corporate PPA, you have the supplier off-taker acting as the intermediary, but the arrangement for the exchange of power and certificates is directly between the corporate, the consumer, and the generator. So in these instances, the supplier doesn't see the benefit of the renewable certificates. They go directly to the corporate PPA. So if we could just skip on to the next slide. So finally, before I hand over to Adam, I have mentioned this a few times, is just to really re-emphasize the importance of having direct live access to market data within your PPA agreement, because it does enable you to make real-time decisions, take actions on the way the market's moving, take advantage from market spikes. And especially at the moment where we've got this huge volatility, it's very, very important that alongside your hedging strategy, to have the ability to react very quickly and take advantage of those spikes. So I'm going to hand over to Adam now.
Thanks, Louise. So I don't know how many on the call are considering a corporate PPA, but I am on behalf of my membership looking to undertake a corporate PPA. What I've tried to do, just in 5 very simple slides, is try and categorize some of the key considerations. Guys, it's by no means an exhaustive list, and be very happy to explore other considerations as part of the chat. But firstly, I want to know what price I'm going to pay and how long I need to be paying that price for. Secondly, I'm going to consider how does the arrangement support my net zero ambition. The third thing I'm going to think about is how do I finance the arrangement? So what financing options are available to me? I want to know where it is, so I want to know the location. And finally, and possibly most importantly, I want to know how much hard work it is. I want to understand how much resource is going to be required to get these to get a corporate PPA in place. So let's just take a look at each of those in turn. So price and tenure. So first and foremost, fully bought into corporate PPAs helping me with my sustainability agenda. However, it needs to be affordable. It needs to support my hedging and risk management strategy. And the slides that Louise and Joe just shared with you showed an incredible increase in the volatility and the underlying price of power at the moment. And if you remember back to those charts, this isn't a Putin effect. We have seen high prices for a sustained period now. They're incredibly high at the moment. They were very high before. So as part of a well-defined hedging and risk management strategy, does it make sense for me to buy some long-term power at a known and fixed rate? So that's one of the first and probably the most important consideration. And a corporate PPA does offer that stability. The second consideration within this is what is the term of the agreement I'm signing up to? So typically we know across the UK, people tend to fix power for 1, 2, 3, even 5 years. As Louise just shared, typically arrangements under a corporate PPA structure are 10 to 15 and beyond. So I need to be prepared to sign up to power for a longer period. Again, to my earlier point, that might make some sense if I'm able to secure power at a favourable rate. I also then need to understand how the price might vary. Again, there'll be lots of buyers on the call that are used to buying power wholesale, and you basically get what you paid for. 5 megawatts of winter baseload, you will get 5 megawatts of winter baseload at the price you've agreed on the wholesale market. What I need to understand under my corporate PPA structure is how that price might vary. So for example, across 10 years, is the price going to be inflation linked? Is it going to move with an index? If so, I need to understand that and the risk and opportunity that brings to my risk management strategy. Also, I'm probably stating the obvious, if I do a deal with a renewable generator, that's likely to be intermittent generation. So I need to understand what happens when the sun doesn't shine or the wind doesn't blow. Am I exposed to balancing and hedging costs, or have I got a flat structure? So I just need to understand how certain, how firm is the delivery of that power. On to the next slide then. Let's think around provenance. So what is it exactly that I'm buying? I need to understand precisely what it is that I'm purchasing. As Louise's slides illustrated, there are a number of routes that I can take to decarbonize the power that the universities take here. One of them is corporate PPA. So I need to fully understand what it is that I'm doing. What impact will that have on my scope 1 and 2 emissions and the reporting thereof? And building on that point, how does this product support my net zero ambition? So a corporate PPA, in my view, provides high provenance. It's a gold standard. I can demonstrate to those interested that the power that I am purchasing is from a renewable generator, because again, as Louise's slide illustrated, I have a direct agreement, not necessarily a direct physical agreement, but a contractual agreement with that generator. So I can say, I can provide evidence I am buying renewable power. And how do I account for that carbon reduction? Well, under various reporting standards, again, this stands up to very high levels of scrutiny. Louise mentioned REGOs before. Across the market, there are different opinions on REGOs. So one option is I could go and buy a certificate to demonstrate that I'm buying renewably sourced power. What I can't say, however, is that I've bought renewable energy. So again, particularly amongst the student population here, there's increasing focus on what does renewable actually mean? What does green mean? What does low carbon mean? So it's being able to provide that those high levels of scrutiny. If we move on to finance then, the next slide, I want to understand what my financing options are. As Joe's slide illustrated, these projects do not come cheap. Am I responsible for any of the CapEx, or am I a source of continued funding that allows the developer to pay down the debts that it's secured with the bank? I would vote for the latter. I can afford to pay for energy over a period of time, again, as part of my hedging strategy. I might struggle to find large sums of money to build and develop my own asset. But again, there may be opportunities for me to secure funding either through public sector initiatives or through the private sector, which would allow me to build my own assets. But again, this is part of the consideration. Do I pay a large sum now and have an asset on site, or do I look to pay down against an asset through a commercial agreement over the term? And again, what commitments am I making to the developer? One of the most important things about a corporate PPA that an energy buyer provides is that certainty, and Joe used the word bankability. So I need to be very firm on my commitment, because that is the commitment that the developer then takes back to the bank or the lender. I need to be very clear on what commitments I'm making. And then I guess I've really covered this. Our scheme is available to support my investments. So depending on the sector you work in and the industry you're working, there may be opportunities to secure funding to help support decarbonisation measures. Next slide then, location. So location, is it visible to me? So Louise mentioned direct private wire PPAs. In that instance, it almost certainly would be, because it's very expensive to lay cables or to plug you into an asset. So under that arrangement, it would be visible to me. And is that actually important to me? There's probably some PR benefits in it being visible to me, but actually from a reporting standard and from a carbon reduction standard, the asset needn't be in my backyard. For example, I could be operating at central London, and I could have an arrangement in place with a developer in West Wales or North Scotland. So just need to determine how important it is to be close to the asset. Do I need to be plugged in to receive optimum benefits? Well, really, I'm just repeating a point that Louise made. There are additional benefits to me being plugged in or having a private wire. However, I'd agree with Louise's sort of appraisal that with the investment that's required to upgrade the transmission and network system, I couldn't bank on being able to receive or to avoid a number of the transmission charges forever. I would need to factor that into my investment decisions. I'd be certain of them in the short term, but whether across the 10 or 15-year tenure, I'm not sure I could build that into my investment case. And finally, on location, will the benefits be felt across my local region? Well, again, depending on what's important to you, it might be that investing locally is an important part of your net zero sustainability, corporate social responsibility agenda. So if that is one of the key drivers, then perhaps a local agreement is important. And then finally, sorry, I keep saying finally, which is a bit of a cue to Hayley to move on. Apologies, Hayley. What time and resource do I have to commit to this? My experience, and I don't know if Louise has got different experiences, they're not simple arrangements. I think they're getting better. There aren't mass market arrangements available at the moment that I'm aware of. Simply, it is easier to go and trade on the wholesale market. It's that's a well-trodden path. That said, the number of corporate PPA arrangements in place across the UK, across Europe, and certainly in the US means that with each one we learn a little bit more about the next. So in terms of consistency, in terms of legal support required, the commercials, credit arrangements with the banks, etc. Again, each time we learn a little more, which makes the next that bit easier. So are they impossible? Absolutely not. Are they in the more difficult bucket? I probably would put them there right now, but I'm aware that Smartest and other suppliers are there to support on that. And indeed, there's a pull from customers at the moment for corporate PPAs. And as Joe's slide said, there is a push from developers to make this work. So generally, my experience is when you have three counterparts that are all ambitious and anxious to get a deal done, then yeah, necessity tends to breed invention, and it can be done, but it's not for the faint-hearted. This isn't something you decide to do on a Monday, expect it to be completed by the end of the week. You're looking at sort of 6 to 9 months of investment quite often. I'll leave it there and perhaps open up to discussion.
Great, thanks, Adam. And I'm really conscious we've thrown a whole load of stuff out there, a lot of complexity, and as Adam said, these are not straightforward. There's lots of moving parts and lots of people involved, but they are doable and getting more standardised. We've had a few questions coming in, so I'll start with those ones, but please keep them coming, and I'll just start from the top and sort of work our way down. The first one was sort of hot off the press. I think Rishi has just announced his statement and the sort of commitment to remove red tape, and will that improve speed? Will that increase speed? Maybe I'll start with this one and then let Adam and Louise add in. But I mean, when it comes to red tape, what takes a lot of time for developers to sort of get from concept to operating asset? It's a sort of a whole stream of things. Location, we've already talked about. Is it the right type of wind? Is it the right type of sun? Do the local community support it? Planning is a massive issue, and planning takes months and months and months, and can take months and months and months. Also connections, where you know, we've got a very diverse network now, and we've got some real challenges with connections and sort of the network constraints. So how do we make that work in the location chosen? And then increasingly, actually, post sort of COVID and with the world in its stages, is supply chain and actually getting the parts. So we've seen some sort of real crunches on supply chain recently, particularly in solar, I think, but wind as well. So I think the aspiration, my answer would be, the aspiration to move the red tape is good. I think to actually make it happen will take a bit of time. I don't know if Adam, Louise, you've got anything to add to that?
No, I think you covered that off perfectly, Jay.
Yeah.
As with all these things, as you say, having the want and the desire to move the red tape and make things easier is one thing, but actually getting it done is completely different. And yeah, I think we'll struggle to see that
quickly. Yeah.
Yeah. I'd agree, Joe, and I think, yeah, but particularly with planning, as I understand it from my developer sort of network, and I don't know if there are other developers on the call, but planning can be a bit of a nuisance, to put it lightly. That said, I think it is really important that the local community are behind deployment of renewable assets. You know, that they're there for a long time, so you know, we wouldn't want to remove unnecessary red tape. Red tape's got a very negative connotation, but you know, careful planning and engagement with the local population is very important. Totally agree with what you said as well on the connections, Joe, in terms of getting grid capacity. Again, as I understand from my developer friends, there are a lot of hoops you need to jump through in order to secure that. So yeah, devil will be in the detail, won't it?
Absolutely. And I mean, the lovely thing with planning, I think, is that a lot of these schemes have really good sort of eco credentials in their own right. So lots of really good, you know, beehives or wildlife sort of pieces in the help them get through the planning. So there's a win-win-win. The next question I think was a really interesting one, and it's sort of particularly pertinent in current environment with volatility of the market. But I think the question, I'll say it, but was almost a sort of, do you think we'll see a shift to generators offering more short-term PPAs and being sort of more flexible in terms of what is on the market in the short term, given what the prices we're seeing and the uncertainty, I suppose, the unprecedented uncertainty? Adam, do you want to?
Yeah, I think my view on that, Joe, would be if I was an established asset, then probably, or very, very possibly, because I would look to do short-term arrangements at current prices. But as your slide showed, Joe, it's these investments often require a 10, 12, 15-year payback. So this very short-term volatility is good for the short term if you're a developer, but you need to be able to provide revenue income certainty over the longer term. So I think, again, established asset, we might see more corporate PPA, if we want to use that phrase for established assets. But I think there will still be a tendency towards longer term. That is, unless buyers are willing to pay a lot more, because if the payback is shorter, then of course I'm sure developers would entertain that. But again, I can tell you as a buyer, I'm looking to pay a fair but as low a price as I can. So I'd probably take term over a very high price in the very short term.
Yeah, absolutely agree.
Yeah, I'd agree with that. I think it's especially with the real drive to increase the renewable energy production at the moment. We've got a huge amount of development to do, and we need that long-term certainty around revenue to leverage the debt that's required. So I think the longer-term contracts will remain for some time.
We've got a few coming in on the sort of the I suppose the tensions or opportunities between CFD and CPPA. The first one on that was one saying sort of looking at CFD for wind, but potentially with hydrogen production as well. Is PPA a route to market? So potentially looking at CFDs, as that's the only route to market, but do you think there's route to market in PPAs on that mix as well?
Yeah, I think hydrogen production, there are different flavors or colors of hydrogen production. So if you want to produce green hydrogen, then you need that to be coming from a zero carbon. In fact, it might actually be legislated that it needs to be renewable. I'm not sure even nuclear counts for that. If it's under a CFD, then of course it has its price protection, so it has its price known. So that might be another route to market for the generator, but the price the generator will receive will be dictated by the CFD strike price. The CFD pot is finite. There are probably more developers that want to partake than will become available. So I think the really interesting development will be, I think around June time, we will know who have been successful in securing CFDs. There'll be those that will still need to find a home for their ambition. And I firmly believe that hydrogen will be one area that developers will be looking to work with the hydrogen industry to power up, because again it's a very energy intensive process. Again, it's that need, so that the hydrogen producer needs renewable energy. The renewable energy provider needs a home so again, that seems like a reasonable marriage.
I think the key with this is that the PPAs are bilateral agreements. They're between two parties, so almost anything can be negotiated and agreed. It's I think, as Adam said already, it's the new and novel that take longer because they haven't been done before, which probably answers the question further down, which was around does geothermal attract PPAs? And I think certainly my perspective is I haven't seen it yet, but that doesn't mean it can't. In theory, it's just it hasn't been done to my knowledge, but I don't know if there's any disagreement on that.
No disagreement. I think with if prices are at £300 and if they can't sustain at this level, but that's probably another whole new webinar. But I think even at 3 digits, geothermal, tidal, wave power, all of these things that were above the investment line are probably now economical. So if there's any good that comes out of this whole situation, is that new technologies now become financially viable, geothermal included. And there's no reason why a PPA, like you said, Joe, is that's just that's a bilateral agreement. A PPA can be attributed or attached to any power purchase source.
Absolutely. There's a really good question around sort of, are corporate PPAs limited to certain types of businesses due to commitment required and sort of complexity? And it's a sort of, is it a hard sell for a lot of corporates? If I kick off on this one and then Louise, Adam come in, I think probably the thing that would stop most corporates getting a PPA is probably credit, because the generator is looking for confidence that actually that corporate can pay the bill or can pay the bill on a long-term basis. So they're looking, you know, how stable is that business? And that's often where these don't get off the ground. I think the second challenge is as we've talked about, they are quite complex, so you do need quite a lot of resource to get them away. And certainly I think Adam's probably got more experience in scars than we have, but actually explaining them to people, you have to go through, you have to explain it and then explain it again and then explain it again as you move up the chain. But theoretically, PPAs, you know, if the credit is there or you've got backing or you've got support, then there's no reason why any corporate couldn't have PPAs. And I think the interesting piece is then how much of your supply do you take on a PPA, because it is a commitment to buy that power. I think typically it would be between sort of 50%. I think some now are going up to 70%, but very, you wouldn't never see people sort of 100% on PPAs just because your demand might suddenly drop if you have a COVID or something like that.
Yeah, no, I think I tend to agree with that. And as I mentioned when I was going through my slides, that's one of the reasons why we're really only seeing the really large multinational companies and big banks signing up to corporate PPAs at the moment. It's because of the amount of capital involved, the time, the investment, and the strength of the balance sheet that's required to support them.
But
Louise, I think.
Go on, Adam. Sorry.
No, I was going to say, Louise, we've spoken about this before, haven't we? I think we both feel that it can't be the preserve of the big players, because net zero, you know, we all need to do our bit. So, you know, we all need to work together to find solutions that allow smaller consuming entities or less resource rich entities find, you know, net zero carbon solutions. Because it's, you know, the world isn't fair, I know, but, you know, where we can level up, to use another one of Rish's expressions, you know, this is one area that certainly needs to be leveled up, because it can't be the preserve of those with deep pockets and huge resources, because we simply won't hit our net zero ambition. So we need to find solutions for smaller players.
I think with a bit of self-interest or just a flying the flag, Adam, do you want to just talk about the tech PPA, which is sort of one of its kind really in the market, but it just shows how you can innovate? Yeah.
So the current tech PPA was struck in 2019. It was from an established asset, but it's serving. I think it's serving 60 members. So even some of the smaller institutions, by virtue of being part of a larger buying group, have been able to access that arrangement. Clearly, with prices where they are at the moment, they're looking quite smug. Those that have bought into this, probably less so during COVID times when prices really fell. But again, it might be that we need to look at consortia type arrangements, basket arrangements, I've heard it called as well, or cooperatives, where smaller players can buy a share. And it might be that somebody represents the interests of, you know, smaller entities. They provide the resource in terms of the intellectual resource, but allow people to provide the smaller players, to provide the financing and that certainty going forward. And I can tell you now, just while I am flag waving, there's continued interest across the higher education sector, no more so than today, I would say, because again, as I said in my slides, it provides that price certainty, but there's a real desire to demonstrate steps that have been taken to reduce carbon content across the UK's campuses, etc.
And I think there's a point there from Emmy around democratisation of PPAs. I think we can all agree that innovation in that space is likely to happen. It's still quite challenging, and it's generally that credit and sort of commercial complexity that stopped it. But I think, as all these things, where there's a will, there's a way. One of the questions was around technology, and we've had a few on technology, but the case for solar and storage, are we seeing more PPAs in that space? I've got a view, but I don't know if either of you have got a view first.
Yeah, my more so in my previous life, yes, is the short answer. I think making the economics work, clearly generate during the day, and then store it and use it overnight when you need it, when the lights come on. That makes good sense. If that price differential isn't enough to fund the battery, then you might as well sell it onto the grid and buy it back from the grid. So, because batteries aren't cheap, they are coming down in cost, but in terms of payback on that investment, simply using it as a form of energy storage probably doesn't work just at the moment. You need to secure other revenues in order to secure that payback on the battery. But it has to be part of the answer, doesn't it? Because we do generate too much in the summer. Sometimes we see prices fall off a cliff, and we don't. We don't. So, and looking into the future, I guess we look beyond battery. I mean, that's got finite resource capacity. Do we look at compressed air? Do we look at other sort of mass storage options? Because again, if we're investing, well, we do across the UK plan to invest heavily in intermittent generation, where we need to be able to manage and smooth that intermittency, the peaks and the troughs.
Absolutely, and I think this market will evolve further as the market evolves. Absolutely agree on that. Question here about increasing demand for self-supply, and are you seeing diversification of organisations to become generators? So I suppose that's sort of the private wire market. Louise, do you want to talk to that?
Yeah, I think as I mentioned before, private wire is very attractive in that it does mean that you're avoiding the non-energy costs, which can be a huge part of the cost as a consumer. But there are risks around it, and there are we mentioned before the potential of changing regulation around how non-energy costs are charged, and there's talk of it being based on gross consumption, which would mean that you lose that benefit. And as Adam mentioned, there's a huge amount of money that you need to spend to put in the infrastructure to be able to operate the private wire. You've also got the challenge around space and location. So you need to be very close to the generating asset as a consumer. So having that space is really, really important. So there are some real challenges to it. I guess as we get smaller scale, I guess that it is still an attractive proposition, but in the back of your mind, the absolute threat that those non-energy costs, avoiding non-energy costs, is an absolute possibility, in that benefit may disappear. So I think it is still something on a smaller scale that is a huge benefit. But yeah, it's just I'd say it's just one of those things. You just approach with caution and understand the implications if regulation was to change.
I agree on all of that, and I think the other point to sort of flag is that if your business is, I don't know, selling beans or delivering, building other things, then actually you're not an energy expert. So the complexity in some of this puts some people off. Having said that, there are an increasing number of business models and sort of organisations offering private wire, almost where they will own and run the asset. They'll build it on your land, but actually you then just take you have a more standard PPA. So again, that market is evolving. I think it's hard graft would be, I think, fair to say, but you can see that over time we will see more and more demand for that, but for all the reasons we've talked about already. I'm really conscious that we're almost out of time. We've got 3 more minutes. Anything you want to sort of sum up with, Louise?
I guess it's just the importance, isn't it? You know, we're in a especially now the pressure because of the Ukrainian situation, and sort of the reliance we have on Russian gas and oil. There is this real drive now to really ramp up the journey to net zero. So I think it becomes even more important. You know, the CFD auctions, the investment in offshore and onshore wind and solar becomes even more important, and therefore the link to the PPA, having those agreements in place to enable long-term investment is really critical, I think, to well, it was critical anyway, but it's it's become even more urgent. So yeah, I'd say PPA is playing a very significant part in that journey to net zero.
Absolutely. Adam, any last
Yeah, I think just adding to what Louise said, it's look, you know, we do operate in you know, people on this call may be competitors, but I think where forums like this and others where we can collaborate and share ideas, because there's definitely a need where we can share ideas. I mean, I've enjoyed getting to know Louise over the last month, and you know, finding out a little bit the smartest, because I've learned new things. But so just by talking about these challenges, remaining curious and inquisitive, that we're not so naive as to think that everybody's listened to this for the last hour and they think, oh, I know everything there is about corporate PPAs. I've been working with corporate PPAs for a little while, and I'm still scratching the surface, because every time you look at a new arrangement, you speak to a new developer, a new bank, there are new requirements. And yeah, depending on where you get your kicks from, but that can be quite energizing and frustrating. So I guess using networks like this and others, just find ways to find out a little bit more about them, and yeah, we'll crack it together.
Brilliant. Thanks, Adam. I'd like to say thanks very much from WUN to both Adam and Louise for their support and input on that. Hopefully it's been useful for everybody. And really just, I'll pass back to Hayley to close up, but clearly we'd love to see you at the next event. And if there are more questions, you now know where we are. So please do file them through and we'll try and come back to you. Hayley.
Thanks, Jo. So I'm just, in terms of wrapping up, just highlighting one of the key benefits. The Women's Utility Network is our free mentoring programme. We are, as you see on here, hugely privileged to have some fantastic experienced mentors, both male and female. So if you are interested in being a mentor, or you are looking for a mentor, please do go to our website and sign up there. We'd be delighted to have you. I also remind you to actually join via the website as well. A number of people have given me some feedback around notification of events. You can, if you're on our signed up on our website, you'll get messages around the events, upcoming events. You'll be able to book tickets and things like that. And the other area that's getting a lot of interest at the moment, we're having a huge selection of exciting podcasts coming out. So please go and listen to our latest podcast with Dr. Kathy McClay. So she was interviewed by one of our advocates here, Sabrina Polito. Again, you can find that on Apple Podcasts, Spotify, Amazon Music, or you just go to the WUN website and follow it from there. And as a final end, just a thank you to our partners and sponsors. Without them, we aren't able to do this. So a huge thank you to them as well. Look forward to seeing you all in April. And with that, I will say goodbye. Thanks very much.